to do some Top That Trade with Phil Flynn, a Fox Business Network News contributor, and Alan Knuckman, the Chief Market Strategist at BullseyeOption.com. Round number one, cut conundrum. What do you see for 2024 now that some of the rate cuts have been cut?
Well, the markets have had it right so far as the futures market's telling us that there were going to be rate hikes and now there's rate cuts in the future. But they've reduced the number of cuts for 2024 because things are so strong economically. GDP is growing. But you've got to look at that as very much a positive in the fact that will hopefully keep the dollar from strengthening. And that helps all asset classes. But follow what the markets tell you. They've been right so far.
Well, the markets are showing that the yields are continuing to go down here in the short term. But it's kind of interesting. We had one of the most hawkish Fed members speak, Neil Kashkari. And this is the least hawkish I've heard him for years. And so that could be a sign that the Fed realizes that the rate hiking cycle is coming to a pause or perhaps to a close. And I think they're starting to realize here that you can't fix the economy just by raising rates. You have to allow these rate increases to take hold. And one of the biggest concerns, of course, with the rate hiking cycle is whether or not it's going to be effective fighting inflation. Well, so far for the oil market, it hasn't been, right? Oil market continues to go up because it's a global market. And I think Kashkari basically said, listen, we can't just look at the price of oil when it comes to a rate hike decision, because if you start raising rates while oil continues to go up, that really squeezes the economy and it's really going to hurt us. So it's kind of a double-edged sword. So at this point, I think the rate hikes are going to slow, if not stop altogether.
Which gives me a beautiful segue to round number two, well and worry. Crude oil has jumped 45% from the May low. How much more upside is there to go? Are you a buyer or seller of oil?
If oil takes out 95, we have a shot to go to 111, and that's kind of our target. But there is going to be tough resistance at 95. We're still in shoulder season. But if we get through that, there's a lot of room to move.
What I'm going to say is let's fill up our bank. All right. Whatever happens in the world, we have the means to take advantage of the opportunity. And if the opportunity is going to be higher oil prices, guess what? We can win from that and we can trade and take advantage of so many of these oil companies and the oil itself. So there are vehicles to participate in that opportunity and fill up your bank instead of your tank at higher prices.
Round number three, Greece is the word. Talk about a comeback story. That country was in deep economic trouble, but now is a success story. What investment lessons can be learned?
Simple. Buy low, sell high. It happened with Greece. It's happened with Spain and Portugal. If you remember a few years ago, those properties were ridiculously cheap, and now everybody's moving there to take advantage of that, and those markets have come back. You look at Japan right now. Japan's at decade-plus highs, and everybody had given up on it. So I'm the optimist, and when things look bad enough, obviously, I think they're bad enough to buy sometimes.
It's kind of interesting when you look at Greece. Greece at one point had among the highest yields in the world because their economy was a disaster. Their government spending far outweighed their gross domestic product. Maybe we should learn from what happened there, right? Because the reason why the Greece story has turned around is that they got their fiscal house in order, right? They cut back on the spending. They became more, and there were some painful cuts to the people, no doubt about it. They were very dependent on the government, but when the government actually took some of those freebies away, it turned their economy around. And in the long run, I think the rest of the country is going to be better for that.
The bonus round question for today, it is the last week of September. September usually has been the weakest month for the S&P 500 since 1945, according to my good friend Sam Stovall of CFRA Research. Sam found that on average, we saw a loss of 0.7% in September. But what does Sam say is the best month of the year for stocks?
I'm going to say December.
I'm going to pick the October.
April, with a 1.6% gain on average.
Well, April showers brings May flowers. Well, maybe it brings a bull market too. Who knows? Okay.
Well, thank you both for showering us with your trading smarts. Go to businessfirstam.com for where to see our show on TV.